I can't say I'm doing this for fun. It's Black Friday shopping. Cars as far as the eye can see. It's like a battle was fought in here. Check this out. So there you have it, a little bit of Black Friday shopping this year from me. I did it more for entertainment purposes, but also do a little bit of proprietary research, and I do think that the foot traffic was quite substantial at a lot of the stores that I ended up going to. Now, what I want to go through real quick today is go through this concept of looking at ETFs, sector or group ETFs, and then going through sort of the top 10, 15 holdings or so and looking at what we might be able to determine about a specific sector. So today, of course, the focus will be on the retail stocks, or the XRT ETF. Again, let me type that in here, XRT is the ETF we're looking at, and here are some of the top holdings in that ETF. You can see in this case the top holdings are fairly evenly distributed. There's a lot of stocks in this ETF between the 1 and 1.5% sort of holdings. And if we just start with the XRT itself, you can see that it actually remains stuck in a wide year-to-date range. So until this actually breaks to the upside, it remains stuck in a range, and you can see we kind of peaked above it, but we're now kind of settling back in. So the point here is that you don't want to chase things higher when they're not actually breaking out yet on a sustainable basis. So a lot of retailer stocks, not surprisingly, as we'll see here in just 1 second, look very similar. Very strong rally. In fact, I would argue too strong a rally, and then they now need to take a breather. And then the way they react to that breather period is going to be determining to us whether there's more upside into year end or not. So, a couple stocks in that space. Let's look at just the top holding here by a small margin, which is Office Depot. You can see similar pattern here. Very strong rally, most likely overbought. Wouldn't want to chase something like this higher to the upside in the immediate term. Then moving down the line, look at something like Children's Place. Extremely overbought. This stock rallied very, very strongly after the elections, about 40% or so. That's a very sustainable, very aggressive move to the upside. Again, wouldn't chase it higher. Letting it consolidate here is probably something that makes a lot of sense. Something like Best Buy, ticker symbol BBY, same story. Very, very strong rally. It actually does look promising through a bit of a longer term lens, but here right now, a stock like this most likely needs to consolidate. Now, again, these consolidation phases can be brief. The way I've learned to do this over the past nearly 20 years of trading stocks is you want to look at something like the 8 and 21 day moving averages. Oops, I just used the wrong thing. And they look something like this. So you can see now the BBY stock, which is Best Buy, has now basically reverted back to its 8-day moving average, which is sort of a first support area. And we want to be looking at the next bullish reversal. Whether that occurs here or down here, I do not know. But I think right now chasing this retail space higher is not a great idea. So let this stuff consolidate, guys. The holiday shopping season really is just starting, in the grand scheme of things. So after a bit of consolidation, maybe we get another bullish reversal into year end. Stay patient. Do not chase stocks higher. I hope it made sense, guys, and I'll see you in the next vlog.